Morning, Steve in Chicago with the morning grain comments. Well, there certainly is a lot to talk about this morning. First of all, yesterday prices were sharply higher with corn up the limit and soybeans and wheat following the higher corn market. Corn market was responding to wet conditions that's delaying plantings. The interesting thing about it, in all the markets, open interest actually declined. So most of that was short covering. So the key now is, do we have enough bullish weather and enough bullish old crop soybean and soybean meal news to continue to push the markets higher? There were quite a few farm economists yesterday that suggested farmers should take advantage of this rally and sell some new crop beans. Perhaps if we get a little bit closer to $6 D's corn, selling some new crop corn, kind of complete some of your 2013 wheat sales, and also even look ahead and look at some of these 2014 soybean and wheat prices and start locking in some of that cash sales. If old crop corn is close to $7 in your area, you probably should let some of that 2012 crop corn also go. As far as the deliveries, there were no soybean, meal, or corn deliveries, heavy wheat deliveries, and there was some heavy soybean oil deliveries. So we'll still be watching very closely the May soybean contract and see if there's any fireworks left as we're into the delivery month. Cash basis levels are still strong. USDA only reported 5% of the corn planted. They have not yet reported soybean plantings. 12% of the spring wheat is planted, and they dropped the winter wheat crop ratings 2 percentage points. That adds a little bit more importance on the annual winter wheat crop tour that goes through Kansas this week and what kind of crop size and quality and harvest dates that they suggest. Harvest dates might be just as important as the crop size, because we're seeing a little bit of concern that if there's a delay in the hard red winter wheat harvest, that could affect spreads and basis levels. As far as the weather is concerned, there's a weather event that's going to start moving into the Midwest in the next couple of days. Heavy rains are forecasted for Iowa and parts of the Mississippi River. The rains could actually diminish a little bit as it moves east. The 10-day forecast calls for normal to below temps across most of the Midwest, normal to above rainfall in the west, normal precip, maybe even normal below precip in the east. The 30-day outlook could also be that way. Meteorologists long-term are concerned about a mid-May rain event that could also soak the Midwest. So we haven't gotten out of the woods yet as far as weather is concerned, and that's going to be an important factor. And as always, very difficult to trade weather markets. Most of the trade is on Mondays when the market comes in and figures out what the next forecast is over the next 10 days and how that will affect U.S. supply. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
I think the thing was, I think that high